Hey everyone, and welcome back to another episode of Crypto Invest. Today I do have quite a few topics to share with you. First, we can talk about the overall market so you can see what is going on the last 24 hours. Also, I do want to talk about Bitcoin. Bitcoin is at an all-time high yet again. It was actually all the way up to 7,400 earlier today. And then we are going to talk about the possibility of a Bitcoin ETF now that we have a future and derivatives market about to be open. And I want to draw some parallel between the Bitcoin ETF against the gold ETF. Also, the cryptocurrencies markets have been getting a lot more attention since it is getting a little bit bigger now. And I do want to talk a little bit about that as well. Also, another day, another opinion. In this articles, I just want to talk to you about one thing, which is the idea of the centralized versus decentralized blockchain. So stay tuned for that. And last and final, I want to give you a quick update on Genesis Mining contract comparison. So before we start, I do want to say that this is for informational purposes only and should not be considered as investment advice. So take a look at the market. Same story, different day. Bitcoin is at an all-time high yet again, but it does seem like we are so used to that now. So look at the top 10, everything is bleeding beside Bitcoin Cash, which has been gaining some momentum. I do think that the whole Bitcoin fork does play a role in the fact that Bitcoin Cash has been rising. If you are in Bitcoin Cash, then congratulations, you are doing pretty well the last few days. Beside that, most everything is red, as you can see here on the screen. All the focus is still currently on Bitcoin at the moment. So talk about Bitcoin. Bitcoin just hit another all-time high earlier today. So depending on which market you are looking at, it was at high as 7,400 US dollars. And you are looking at the Bitcoin 7-day chart. At this point, how high can it go? No one knows. The fact is, the SegWit2x hard fork is still 13 days and 10 hours away, which is quite a long time in crypto land. So anything can happen in 13 days. Bitcoin can go a lot higher, or it can move sideways, or it can go down in value if people think that it is overvalued. Do know that there are a lot of people on the sideline at the moment. Either they missed this entire run and they are looking for a pullback so they can get in. And also there are a lot of people who are entering at a pretty low number back here at around 5,700, and they are looking to take profit. So how high can Bitcoin go? It depends on which side is stronger. So keep that in mind. So a lot of people do believe that the SegWit2x news have already been factored into the price already, meaning that this price here taken into account of the SegWit2x hard fork. So if the hard fork doesn't happen, then this whole thing can change very quickly. It can change either way. It can go down quite a bit because the people who've been buying Bitcoin in hope of getting the SegWit2x coin will no longer be interested in SegWit2x. So that would cause the price to go down. But on the flip side, the pricing also go up significantly more because the uncertainty of the fork is gone. So at this moment, Bitcoin, the future price of Bitcoin, your guess is as good as mine. But the one thing I can be certain is that Bitcoin is going to be very volatile the next few days. So a lot of people say the reason why Bitcoin been rising a lot the last few days has to do a lot with the fact that the CME group announced the Bitcoin future contract trading platform, which I covered that the last couple of days. So if you missed that, go back to that. What it's gonna do is it's gonna open up a futures and derivatives market for Bitcoin, which doesn't exist currently, And even though futures and derivatives are not insurance contracts, but institutional money can use futures and derivatives to act like a contracts to protect their downsides, so then they can be more confident to trade in Bitcoin. Now, this leaves the door open for the fact that future and derivative contracts say become legalized, then the chances of a Bitcoin ETF being legal can be high as well. So as you know, ETF is a way for you to buy into an underlying asset, in this case a Bitcoin, without actually buying the Bitcoin. And the ETF is the share that can be traded on a traditional market. Now, the Bitcoin ETF was attempted by the Winklevoss twin. You may have known them from Facebook, especially from the movie, The Social Network. However, their plan of a Bitcoin ETF was rejected by the SEC. And then after that, someone else tried the second time and a third time, but they was asked to withdraw the application. And a lot of this have to do with the fact that the SEC, which is the Security and Exchange Commission here in the state, they are not ready to deal with Bitcoin yet from a regulatory perspective, because we don't have a regulatory framework in place. So that's the reason why. Now, this is nothing abnormal. I do want to draw some parallel between Bitcoin ETF and the gold ETF. So if you notice here, the first gold ETF was actually introduced in 2002. The application or the proposal was filed, but it wasn't until March 2007 that is actually widely traded. And this is not particularly related to the US market, but I do want to draw the parallel that gold went to the same struggle when they have to explain to the regulator what they are trying to do with the gold ETF. And that is what we are with Bitcoin. And of course, the gold ETF finally get approved. So I do have high hope that the Bitcoin ETF will also get approved. So that leads me to my next question. What does that mean to you as an investor? So it means quite a bit actually. This is in the older articles, and of course all the links will be in the description below. But this article talk about how ETF transformed the gold market over the last decade. And in short, it changes a lot. It's introduced a lot more player into the market. You know, before the gold ETF, a lot of people was not interested on owning gold, physical gold that is, because they have to find a way to lock it up. They have to find a way to secure it. Gold ETF, it's a way for them to be part of the gold market without actually own a gold physical item. Now, some gold ETF actually does buy gold and they issue the shares on those gold. So that means they actually have the actual gold in the vault and they issue shares on that. And other ETF actually trade the future contracts of the gold, not the physical gold. So my take is this whole thing that happened to the gold market will happen, in my opinion, to Bitcoin. So if the Bitcoin ETF is gonna be established, a lot of people who are not interested in owning an actual Bitcoin at the moment or any cryptocurrencies because they are not tech savvy enough, or they think it's too complicated, or they just do not want to deal with hardware wallet or private keys, the ETF is a good way for them to be a part of that. And we're gonna have ETF that are using the future contracts, and we're also gonna have ETF that someone else is actually managing the actual Bitcoin and issue shares on them. So that will be really interesting, and that's gonna introduce a lot more money into the market, and is an important part, in my opinions, that once someone buy an ETF of Bitcoin, that's the first step into the door, and eventually he or she gonna discover that it is actually quite easy to own an actual Bitcoin and secure it than they think. And they're also gonna find out a lot more about other coins like Ethereum and Litecoin, for example. And of course, the value from an investor perspective is gonna be fantastic. The value is gonna go up a lot because there'll be a lot more demand. So the ETF is definitely gonna benefit the consumer more than the future market, which gonna benefit mainly the institutional investors. So that's kind of how I see things. So let me know what your thoughts on these, and I would love to hear what you have to say. Next, this one to talk about the fact that the cryptocurrencies market has become pretty big, and it's have garnished a lot of attentions the last few months. And the market is, compared to traditional stocks and bonds market, it is pretty tiny. It's only at $190 billion at the moment, 192 billions. But compared to some of the market out there, it's not that small. So for example, the market had consistently held value in excess of 100 billion since the summer, with a daily volume in excess of $4 billion, and this is about the cryptocurrency market. But when they compare that, say, to a GEM market, GEM market in Hong Kong, which is a growth market, it's only have a sub market cap of $40 billion, and several Asian countries do not even have equity markets above 170 billion total market cap. So Bitcoin and cryptocurrencies are quite high compared to these markets, and it's certainly been recognized and being taken very seriously by investors worldwide. So the one thing that stopping Bitcoin at the moment from really have a much wider adoption is the regulations. So as you know, ICO has been doing pretty well earlier this year, and then it's just a flood of ICO. Some of them are bad actors, and that caused the regulation to come down hard on a lot of them. And secondly, a lot of countries now are currently still working on a regulatory framework to deal with cryptocurrencies. So once that framework is in place, we will have a lot more people that put money into this market and be more confident that they have some protection from the government. So give you an example, as you know, I trade the stock market, bond market. I work in finance for a very long time. So if there's fraudulent activities, say with my brokers, and my broker closed down, I don't actually lose all that money. In the United States, the SEC does guarantee a $250,000 US per person for a broker's account in the case of fraudulent activity. Now, on the flip side of that, if you have a lot of money, case in point, in Mt. Gox back in 2013, and Mt. Gox, which is a very large, the largest at the time, trading Bitcoin, I think their volume at the time was like 80% of all Bitcoin trading. And they close down, you are out of luck. No one can help you. They close down, they will take your money and they will take your Bitcoin. No one else can guarantee that. So regulation, in my mind, if done correctly, will be a huge factor in adoption of cryptocurrencies. Now, of course, like I said, another day, another opinion. Someone else come out with their own opinions about cryptocurrencies and how he favored a centralized central bank backed digital currencies over decentralized cryptocurrencies. Everyone is entitled to his or her own opinion. So I'm not going to go into what he says and how I feel about it. I'm actually going to talk about the idea of a centralized versus decentralized cryptocurrencies. So in my channel, there is a video that talk about this very topic, about does blockchain really need a native coin? And this is a really good article, a good read. I will certainly leave a link to this article below. But what I want to point you to in this article is the idea that there are 4 different types of blockchain. So on the top portion here, the top 2 quadrant is the public blockchain, and in the bottom quadrant here, that's the private blockchain. And then the more you go to the left, it is the less trust you have to the validator, and the more you go to the right, the more trust you have to the validator. And then the more you go up, the more anonymity of the validator, and then the more you go down, the less anonymity for the validators. So let me kind of give you what this means. So take Bitcoin for example. Bitcoin gonna fall under the first left quadrant here, the top left quadrant, because it is a proof of work system and it is a permissionless public. Anyone can see it. That's why it's a public blockchain, and it's permissionless. Anyone can put an entry onto that ledger. So every time you spend Bitcoin, you don't need permission to spend it. And each time you spend it, your transaction will be recorded onto the blockchain. So and then also, you don't know who the miner is. So the miner is the one who validates your transaction, and you don't know who the miner is, and you don't care what the miner is because you believe the miner is incentivized to do the right thing. On the flip side, on the proof of stake system, I also have a video about proof of work and proof of stake in my channel, so if you're interested, take a look at that. On the proof of stake system, you have a lot more trust to the validator. You know, the person who gonna validate your transaction on proof of stake, you trust that they have enough stake in the system to not cause any double spending. Because if that happens, the network will be very unstable, and their stake, the value of their stake may go down. Now, when someone talk about a centralized blockchain, like the bank talk about it, I think countries talk about it, they actually talk about the permission private blockchains or permission public blockchain, depending on what the situation is, but more than likely it's going to be a permission private blockchain where the blockchain is controlled at the centralized point. So nothing much different than the current centralized server that we have today. There's one issuer, for example, or one person controlling the entire server, or one entity that does that. And when they talk about centralized blockchain, it's basically a fancy database that have cryptographic controls. So it's gonna have a better security system because transactions have to be validated to your private keys, for example. So it's a little better than what we have today. You know, something like, for example, what Visa is doing. We trust that Visa does the right thing, and we trust that Visa have good securities in place, so the transaction isn't being stolen, or my information is not stolen from the system, or someone couldn't easily fake as me. So cryptographic control will enhance that, but it's still going to be a centralized database. So I do want to point that out, because whenever you hear a company making a cryptocurrencies or a bank issue cryptocurrencies, they are more than likely talking about a centralized private permission blockchain, in my opinion. And when we talk about Bitcoin and Ethereum, we are talking about a public permissionless blockchain. So that's the difference. Alright everyone, so last but not least, I want to give you a quick update on Genesis mining. I used to do this video as a separate video, but I think it's way more efficient if I combine them with my daily videos. So Genesis still have the same three contracts, the Zcash, Ethereum, and Monero. And the Zcash potential return on investment, these are over 2 years, is 74%. Ethereum is 27% after 2 years. And Monero is about 43% after 2 years. The price versus difficulty level, Ethereum price has gone down 2.65% the last 30 days. And the difficulty level is to be determined, because after the Byzantium hard fork, I am still waiting for the number to normalize. Monero price gone down 8.03% the last 30 days. And the difficulty level gone down 11.66%. Zcash is down 14.96%, and the Zcash difficulty level gone down 14.77%. Those are the numbers for today. Remember, these calculations are based on the current market price and the current difficulty level. Thank you so much for watching this video. Please hit the like button if the content helped you, because it does help other people as well. And subscribe to the channel if you haven't done so, and I will talk to you soon. Bye bye.